Good morning, it's John King with Summit Funding. It is Monday, June the 2nd, and I'm coming to you with your Monday mortgage update. So first of all, today I want to always update you on interest rates. Interest rates are holding steady, but this week is an extremely important week. So if you've been thinking about locking in an interest rate, this might be a good time if you don't have a huge appetite for risk. In other words, Thursday and Friday are some pretty significant days that news is going to be coming out that will be determining the future of interest rates as we go into summer. So right now we're at pretty good numbers as far as interest rates are concerned. The fact of the matter is Thursday and Friday could cause a shift in interest rates to move even better than where they are today, or it could cause them to go back to levels that we were at earlier this spring. So depends on what your appetite for risk is, but for a lot of people, you might be in better shape. Just go ahead and lock in now so that you know exactly where you're at and freeze in that interest rate, just in case things don't go the way that we're hoping they go. Speaking of interest rates, I thought I'd spend today's Monday mortgage update talking about refinancing. A lot of people, especially in the last year, since June of last year, almost exactly a year ago, when interest rates shot up, we've been looking at interest rates in the mid to high 4% range. We also have people who had purchased homes, 5-6 years ago that have, again, similar interest rates, high 4s, low 5s. More importantly, a lot of those people could not refinance because of a lack of equity in their property. Well, we saw a pretty significant increase in home values over the last year and a half within our local market here in the Central Valley. So the opportunity to refinance is available for a lot of people. So I thought I'd take a quick minute and point out kind of what are the 3 things that most people try to do when refinancing a home. So I'll cover very quickly what those 3 things are. The first is to decrease your interest rate. So when you drop an interest rate, you're typically looking at saving yourself money per month by dropping that interest rate, or decreasing the term, or the time that it takes to pay off your loan. What a lot of people don't realize is that you can refinance to get a lower interest rate, but not extend back out to a new 30-year term. Most people who don't refinance choose not to do so because they don't want to start that clock over again so that it's another 30 years from now before they pay off their home. So to save you from that challenge, what you want to look at is maybe a 20-year loan or maybe a 15-year loan. I've got a client right now that's 5 years into a 30-year loan. We're able to refinance them, save them a little bit of money per month off of what they're paying today, and get them into a 20-year term. So it pays off their home 5 years faster and saves them a little bit of money per month. So the first 2 reasons are to save money on a monthly basis or to decrease the term on your loan. And the last reason why somebody would look at refinancing is to pull cash out of their property. You got to be extremely careful when you're thinking about pulling cash out of your property. The fact is that your home is not an ATM machine. You can't take years to keep repaying back these debts, and sooner or later, as we all found over the last 7 or 8 years, the cycle of home values will at some point in time put you in the position where you cannot pull any more cash out. So do not live in a position where you're always pulling cash out of your home to save yourself from your spending habits. But the fact is, there are times when it makes sense. So whether you're looking at home improvements on your property, whether you're looking at just consolidating debt and getting yourself in a position where you can put some more money onto some other endeavors like college educations, there's a lot of good reasons to pull cash out of the home. So don't think that that is a negative, because overall it is something to be very cautious in doing, but it's a good financial strategy used in the right way. So again, the last piece of it is mortgage insurance. A lot of people who did loans over the last few years got loans with mortgage insurance. The truth is, getting rid of your mortgage insurance is very much like dropping your interest rate. Now, sometimes you get rid of your mortgage insurance even though your rate goes up, and it may still make sense, because that depends on where interest rates are compared to where they were, how much time you have left on your mortgage insurance, what it's going to cost you to get a new loan. The fact is, getting rid of mortgage insurance still is about the same 2 benefits of lowering an interest rate, which is either paying off your home faster or decreasing the amount of money you pay per month. So if you or anybody you know has some questions about whether they could or should refinance, give me a call. My team will set up a time for you and I to talk on the phone or meet in person, and I'll do a complimentary consultation and help you figure out if refinancing is the right thing for you to do. Thanks so much and have a wonderful week. Bye-bye.